Good morning, everybody. This is the live market open for Wednesday, May 17th, 2017. We have a nice date. I'm Yohay, I'm a Forex Wrench and Market Movers podcast, doing the show as usual for FX Street. And of course, today the political news has some impact, significant impact on what's going on in markets. As always, we'll cover recent developments in markets, discuss our charts and levels, support and resistance for major pairs, for crosses, and for oil. We'll discuss the upcoming events of the week. We have a special segment today on Forex volatility. What's going on? Hopefully, the recent developments did wake it up from the bottom. Our currency of the week is the Aussie dollar, and we'll before wrapping up, we'll discuss the week ahead. So we have quite a few things on our agenda this morning. And as always, your questions are more than welcome. So I see here a few people in the chat. If you cannot see the chat box alongside the screen, please go to the address here appearing right now, klk.io/fxstreet-forex-live-video. Okay, so let's jump to it. US President Donald Trump is the center of attention. I'm sure he likes that, but it should be for the right reasons. So just an update on the scandals. I guess you've been hearing it on the news, but just to sum it up, last week the president fired FBI Director James Comey. It was messy damage control. At the beginning, they said White House said it was not Trump's initial decision, but just a recommendation because of his Comey's handling of the Clinton affairs. Then Trump said, yeah, he wanted to fire Comey for a long time, and we have now the fresh revelation from the last 24 hours or so or 12 hours is that the memo by Comey shows that Trump asked him to intervene, also asked him for loyalty, asked him to let Flynn go. And we have a second affair. So last week, Trump met with the Russian foreign minister, Sergei Lavrov. The US press was not allowed to take pictures before they closed the doors. Only the Russian press was there, but the more interesting thing is that he disclosed classified data, which is, of course, his right. He's the commander-in-chief, but data that was probably came to him from Israel, a close ally, my home country, and that Israel risked a spy within the ranks of ISIS, within the Islamic State. So we have also worries about that, and all this talk is for markets. I'm mentioning all this stuff which is more political because it moves markets. Finally, the Trump issues are not only on the sidelines, they have a significant negative impact on the US dollar. Why? Because markets were hopeful for Trump to provide some reforms, okay? Mostly tax reforms. That seemed like the easiest path to go. So we're talking about tax cuts for corporations, and that's why markets were on the move, and it would steer the US economy as well. We're talking about infrastructure spending, which I haven't heard for a long time, but in the campaign, Trump talked about $1 trillion project, and deregulation. So everything now is pushed away. We already we had the first failure with the Healthcare Act, then we had a partial success, but everything now is on the sidelines because of this. Okay, so if we have a non-functioning White House and no tax reforms, and it's quite a mess, and there are doubts about the US economy, in any case, that weighs on the US dollar. So good morning, Ed. Good morning, everybody. So that's quite a big deal, not only for news junkies, but also for markets. This Trump affair, the scandals, Flynn, Comey, more and more Republicans are becoming doubtful. Of course, we have the expected reactions from Democrats, which are a opposition party, but Republicans are also worried. Let's continue with other things. So these Trump scandals joined the mess in the US economy. Okay, and we'll talk about that soon. Oil prices recover from the lows because there's once again talk about an OPEC non-OPEC deal for extending the deal up to March 2018. Okay, we had a 6-month deal. Now we're talking about an extension for 9 months. it isn't a done deal, but we did see some kind of recovery. Remember that for every barrel that Saudi Arabia, Russia extract from markets, we have the US shale industry producing another one. Well, I might be making it too simple, but each time prices go up, the US produces more oil, and when prices go down, the US produces less. So all in all, we have oil prices in balance at relatively low levels. Last week, we had the Bank of England. It's worth stopping on that for a bit more as well. We had the Bank of England's Super Thursday, because they also released their quarterly inflation report. So we had there Mark Carney, the governor of the Bank of England. He talked about the central bank. They're assuming a smooth Brexit. I don't know how they can assume that with everything we're reading in the UK press and the European press. Hopefully, Brexit process will be smooth, but it's not a done deal whatsoever. So despite assuming a smooth Brexit, their prospects for the UK economy are not that bright. So they expect negative wage growth. We have some data today. And we have also, we did start, Ed. Well, you refresh the screen. We have expectations for negative wage growth, and we have expectations for inflation to peak towards the end of the year. So we're not expecting any kind of rate hike from the Bank of England, and this keeps pound dollar under 130. Remember, it jumped on the announcement of the UK election, and now it's stuck. All right. And another political news as well. We have Angela Merkel, the German chancellor, winning once again regional elections, and she looks to have better chances of winning a fourth term in September. It's still a bit far, but it's a bit also adding to the positive sentiment for the euro. Okay, the data in the US, which I talked about, it's negative. And talk about negative, retail sales missed with 0.4. The control group missed with even worse numbers. There were some upwards revisions, but they did not compensate. Now, inflation, we learned 2 weeks ago that the Fed's favorite figure, the PCE, it dropped. Now we learned also that the regular inflation data, the core inflation, is weaker, dropped under 2%, 1.9. So the motivation for the Fed to raise rates in June is a bit lower. Consumer confidence came out as expected, and PPI beat expectations. So maybe inflation is not collapsing, but doesn't look good. Jobless claims are okay with 236. Yeah, thanks, Linda. Yeah, refreshing the browser always helps. Jobless claims are okay. Building data, we had yesterday housing starts and building permits, both missed expectations. So all in all, the wider picture for the US economy is mostly mediocre or leaning to the downside, if you wish. There were too many negative surprises, and this weighs on the US dollar. Elsewhere, in the UK, we had industrial output falling, so the weaker pound doesn't help that too much. And we have a deeper trade balance deficit in the UK, 13 billion. Again, this weighs on the pound. Yesterday, we learned that inflation in the UK is rising quickly. That's a result of the weaker pound. Imported goods into the UK are pushing prices higher. So headline inflation stands at 2.7% year over year, and core inflation is higher as well. In the Eurozone, things are looking better. German GDP was confirmed at 0.6%, very strong growth quarter over quarter, and also Eurozone GDP looks good. New Zealand, we had the dovish RBNZ, but then we had good retail sales, so we did see the Kiwi fall, but not too far. Okay, time to go to the charts. All right, and we'll see the big move that we've seen recently. So this is euro dollar. Euro dollar is at a 6-month high. We've been at these levels. Last time we've seen them were in November 2016, just before Trump won the presidency. So Trump giveth, Trump taketh away. We're currently 111.06. We just reached resistance there at 111.20. So far rejected from resistance. Let's widen out. Let's zoom out to the daily chart, and I'll show you where we are. So we're at a critical juncture here, 111.20. If you can look back to the other side of the screen, we can see that this area, 111.20, was a double bottom back in August, September, October. Okay, so we had it as a very strong line of support, and the first attempt to break above this line was rejected. But if we do look at what we've seen this year, we're now above the uptrend channel. So we had higher lows and higher highs since the beginning of the year, and we're breaking above this trend to the upside. Okay, so there's lots of momentum behind the euro. So resistance 111.20, aforementioned 112, a round number, I wouldn't say strong resistance, and 113 was the post or the pre-US election high when we thought Clinton would be president. Further resistance 113.60. Looking down, we have 110.40, which worked as some kind of support in earlier days. 110, of course, the round number we broke above after first false attempt, and then 109.50. Okay, so interesting days for euro dollar. Pound dollar, here we are at 129.20. Once again, hard to break above that 130 level. If we do break above 130, we have 130.50 and 130.130. Currently, support here at 128.25. 129 is sort of a pivotal line. All in all, we're seeing some consolidation. We have more data today, so maybe we'll see some kind of a move. Dollar yen is reflecting the weakness of the US dollar. If last week we had it reflecting the strength of the dollar, now it's in total reversal. So we're already some 200 pips off the highs. 112.34 is the current level. 112.20 is support. It was resistance in early April, followed by 111.60, which used to be a triple bottom back in February, followed by the round number of 110, and then 108.10. To the upside, we have 113, 113.60, 114.33, which was the recent high, and above that, 115.50 is the next line of resistance. So dollar CAD almost reached 138 on the weakness of oil prices, but now we have oil prices recovering just a bit, and more importantly, US dollar is falling. So we already dipped under 136, but I see this so far as a false break. Further support is at 135.35, and it's followed by 134.60 and 133.80. Resistance 136.40, 137.50, and 137.90, just under 138. Aussie dollar is well, it had its own troubles from China. Anyway, it's currently recovering. Resistance there at 74.50. Further resistance 75, then 75.50, 76.10, which is already a strong level. To the downside, 73.75, a veteran line, and 73.30 on the downside. Okay, so but we had the Aussie making a turnaround. Kiwi dollar reached new lows, actually the lowest I think in over a year. No, not a year, it's 11 months. Anyway, currently reached a low. The lowest support line there is 68.15. 68.80 is sort of a pivotal line in the low range. Resistance there at 69.60. Above the 70 level, we have 70.40 and 70.90. Okay, so the Kiwi did not manage to make such a nice turnaround like the Aussie, but it's off the lows. Okay, and dollar Swiss, similar to the yen, it reflects the strength, or in this case, the weakness of the US dollar. So we're back under parity, currently at 98.27, just above support there at 98.20. Lower support, well, is much lower at 97, and then it's followed by 96.60. Resistance at, of course, parity, but before parity we have 99, and then 101. So a few round numbers to the top side on dollar Swiss. All in all, we're at the lowest level as well since early April, but if we fall a bit lower, if we fall under that 98.20 line, we're at levels last seen, well, in 6 months, in October, in November, back when Trump won the presidency. Okay, so these are the major pairs. As you can see, the weakness of the US dollar is felt across the board, and it's quite significant. And now for a technical segment for crosses. We're in the 3rd week of May. So we'll begin once again with the Swissy. Euro Swiss, where the Swiss National Bank, of course, likes intervening. We had this jump after Macron won the first round, but couldn't go much higher. Currently at 109. Resistance there 110.15, 110, 109.80, and 109 is sort of a pivotal line. 108.70 used to be resistance, now it's support, and much lower 107.80. Okay, I wouldn't trade this pair as it's prone to intervention by the S&B. Euro pound, the parity pair, the Brexit pair is currently at 85.90, resistance there at 86.60, 87.80, and and 88.50, support at 85.30, 84.80, and 83.30. So the euro looks stronger. That's why we're seeing it move a bit higher, and the pound is stuck. Euro yen, highest levels since, well, a year or so. So the euro is looking good. The yen is lagging behind. High resistance there at 125.80, followed by 125. Support 124.50, 123.80, and 123. Okay, so it's quite a turnaround from the lows of April. But not that much movement here as in another yen cross. That's the pound yen. So pound yen had quite a move there, over 1,000 pips, but now it's falling back down again. The yen looks better than the pound. High resistance 148.50, followed by 146.80, and we're approaching support at 144.50. This is followed by 142.80 and 142. So lots of pips to be gained and lost also in pound yen. At least we have here clear trends, a very steady upswing, and now we're seeing the trend. The tables have turned against pound yen, against the Gepi. And we'll conclude our crosses segment with moving to oil, the most important commodity, currently 48.25. The price of crude oil, WTI crude oil, dropped about under support at 47. It reached a low, which is the new line of support at 43.70. Further support waits at 42. 47 remains a line of support, resistance at 49.50. You can see how this line 49.50 works very well in all directions, and it's followed by 52. So we had a recovery from the lows. I'm still a bit skeptical about the price of oil. So this concludes our technical segment for crosses. Before we move on, I see here a question by Ed. Ed says, the euro is taking advantage of the dollar weakness, but I guess to play against retail traders trading the gap are in play, and I'm still a bear at 111.22. Must be a top, and a short hit there is my play. Okay, so yes, the euro dollar is taking advantage of the weakness of the US dollar. We're seeing weakness of the dollar across the board, but the biggest winner, as you said, is the euro. But the euro also has its own reasons to rise. We have relatively strong growth now in the eurozone. Okay, 0.5 quarter over quarter is 2% year over year. Unemployment is falling. Politics look more stable in the eurozone for a change than in the United States of America. So if you compare Trump's scandals with Macron's victory, you get a more favorable picture for the euro and less favorable for the US dollar. There was also a short squeeze, of course, undoing of all these dollar longs. You're still a bear. Perhaps maybe we had this relatively big move. I must say slow move. So we're going to talk about volatility later on. I must say it's a slow move, but at least things are on the move. Yeah, 111.20 or 22 is a strong line. Let me look again at the chart. Well, so far you've been vindicated, Ed, because we're back to 110.92. So the pair was clearly rejected for now from this level, but I think there's more momentum to the upside after we see some consolidation. Perhaps we can move higher. Parliament elections. Yeah, Lots of things, of course. Politics in the Eurozone is always complicated. In any case, so far, a clear rejection from the previous double bottom of 111.20 now works as a top, as a line of resistance. All right. One more thing, talking about dollar weakness. This is the CME Group's, rate hike expectations, projections for June. They've been close to 100%. Now they're back down to 70%. I don't see a rate hike in the United States, even if we put politics aside. The US economy is just not doing that well. Employment situation is not favorable. And, employment is favorable, but wages don't look good. Other figures like retail sales don't look good. So I'm a bit more bearish on the greenback. All right, let's continue with upcoming events for this week. So today after the show, we have the UK jobs report. Watch out for wages, because with higher inflation and slow wage growth, the standards of living of UK citizens is falling. This comes before the elections and is unlikely to derail May's victory, because it's all about leadership and she has a clear advantage over Jeremy Corbyn. But it's worth mentioning that the situation in the UK is not that great. My final Eurozone CPI figures at 9 GMT. So probably they'll be confirmed. Also, this is favorable for the euro. Inflation, core inflation is up to 1.2%. We're expecting confirmation. We have oil inventories, expecting a rise in inventories, a build of inventories, because we had some private data, and last week we had a big fall. And Japanese GDP. Dollar yen moves more on US figures than on the Japanese figures, but it's still worth noting if you're trading around that time. Tomorrow, early birds or night owls, the day begins with Australian jobs report, 1:30 GMT. Last time it was really good. This time, perhaps we'll have a setback. Let's see if the Australian dollar continues recovering. The third top-tier figure in the UK is released tomorrow. It's retail sales. So far, they've been quite disappointing this year. A focus on non-essentials. A focus on essentials like energy and food. And Brits are buying less non-essentials like, TVs or things like that. Jobless claims and the Philly Fed manufacturing index at 12:30 GMT. And perhaps for euro dollar, we just talked about, big event is, Draghi's speech. It can also turn into a non-event because Draghi, in some cases, just doesn't say anything. Okay, but hopefully you'll talk about monetary policy, about the improving situation in the Eurozone. So far, I tried to talk down the euro, but it didn't really work of late. And Friday, relatively calm day for those trading the Canadian dollar. We have CPI and retail sales. So these are top tier figures for Canada. And the Eurozone and consumer confidence ends the week. Okay, so that's the events await us in the rest of the week. That's May 17th, 18th, and 19th. And now for our currency of the week, the Aussie dollar. Okay. So the Australian dollar dropped with commodity prices. It's not only oil, but it's also other commodities like iron ore, which is the key export of Australia. Australia also exports copper and other metals, especially to China. And there are worries about China. Industrial output came out weaker than expected. The forward-looking Caixin PMI, Purchasing Managers Index, is just about balanced between expansion and contraction, weaker than had been expected. Retail sales missed expectations as well. They grew less than expected, but at least the latest jobs report was excellent. So tonight we'll have another jobs report. And the Reserve Bank of Australia is firmly on hold. They do not intend to move anything in their policy anytime soon. In the United States, worries about Trump. When I prepared this presentation, I wrote shrugged off for now, but things have changed, at least in the last 24 hours or last 48 hours. The US president is really hurting the US dollar. So they were shrugged off, but not anymore. The US economy looks weak. We've mentioned that. We have weak retail sales, poor wage growth, The other figures do not look that optimistic. When the US dollar was strengthening, it strengthened more against commodity currencies than against the euro and the pound. The euro, as you can see, is now on a roll, but also the Australian dollar is recovering. Housing in Australia is an issue. Sydney is the second most expensive market after Hong Kong. Prices rose nominally, not looking at inflation, 4 times. There is fourfold increase in the past 20 years. There was also a rapid population rise. Australia accepts immigration. They have the point system, and borrowing is cheap. As you can see from the graph here, when the RBA cut rates below 3%, house prices, at least in Sydney, the biggest city, have been on the rise, but they have been on the rise also in Melbourne and other places. Some places that were hit by the commodity bust or the slowdown in commodities did not enjoy the same success, but they still, prices are still on the rise in Australia, okay? So there is talk, always have been worries about a bubble. The government wants to boost supply. I've heard about a project turning old military barracks in Melbourne to a neighborhood, and so far, at least, housing does balance out, does counter the slowdown in mining. So that's what's going on in Australia. The shift of the economy is moving from extracting metal, which is still very important, to housing, but the debt to after-tax income ratio has reached 190%, and that's quite worrying. So it's better to grow your manufacturing sector or services sector or exports, whatever, but not housing. So far, it did balance out the economy, but we can certainly worry. The government also introduced measures to limit more debt taking, so that should sort of take some air out of the bubble before it bursts. But there are certainly worries about housing in Australia, also in Canada, by the way. So when we're talking about the Aussie dollar, commodity currencies, commodity prices are the key, okay? China becomes more important once again. We've seen the impact. We had a few months when China was not having such an impact on the Aussie dollar. It has a new impact now. Watch out for housing. It doesn't have an impact on the Aussie dollar, but it's lurking in the background. Always keep that in mind when you're trading the Aussie. So any bullish positions on any longs in the Aussie should take into account that we have housing always there. I see more downside risks to upside risks. The US slowdown, what we're seeing now, the Trump trouble may help the majors, but not. It helps the euro more than the Aussie. Okay, it helps the pound, even with all the issues around Brexit, more than the Aussie, more than the Kiwi, more than the Canadian dollar. Okay, so that's my opinion, and let's end this segment about the Aussie dollar with looking at the chart, at the bigger picture. Let's zoom out to the daily chart of Aussie dollar. So we're currently between 73.75 and 74.50. That's the current range. Off the lows, but not going too far. Resistance 75, 75.50, 76.10, and way above 77.50. To the downside, we have 73.30, 73.10. They're very close there. Then 72.50 and 71.60, which is the ultimate line in the sand. Okay, so this concludes our segment about the Aussie dollar. And we have another comment here from Ed. It says Europe affects China and China affects Australia, so Europe can do the damage. Yeah, sure. Well, it's an interconnected world, and we have everybody influencing everybody. Okay, so of course, if we have a slowdown somewhere, we can have a slowdown everywhere. If the administration in the US gets into deeper trouble, then it will affect growth in Europe and China everywhere. Okay, next segment is I want to talk about volatility. A painful point for me personally, well, because as you know, I'm the founder of Forex Crunch, talk about currencies, and when things are not moving, I don't have anything to talk about. But it's also a problem for other websites, and also a problem for brokers, and also a problem for traders. If you don't have opportunities, it's a mess. So looking at mataf.net, seeing that euro-dollar volatility is now reached back. It's back to the lows of October 2014. Okay, we had this spike around Q4, and now we're back to the lows. Okay, and the lows, we dropped under previous lows, and now back to lowest levels in 20, well, it's in 2.5 years. So again, euro-dollar is not the only currency, but it's the world's most popular currency pair. So we had more movements in the pound, for instance, in the past year. But in general, it's not only euro-dollar. It sort of reflects the wider sentiment. So euro-dollar volatility currently stands at around 70 pips per day. Luckily, yesterday we had a stronger day than that, but that was the exception, not the norm. Volatility lowest since 2014. The lowest volatility, the trough, was back in the summer of 2014. And since then, we had a big wake up with the ECB, with S&BOM, with so many other events, with Brexit. So we're back to the lows. Last year, we did have big shocks, but they were short-lived. So Brexit really killed the pound. Remember that pound dollar touched 150 on the night of the referendum and collapsed to a range of 130, 135 and continued lower. But after the big collapse, after June 24th, we had things becoming a bit more stable. So we had maybe a few more days of action, and then things stabilized. Same thing with Trump. Trump won the elections. It was a big shocker. It triggered a dollar rally. We had euro-dollar making a movement of some 400 pips from 113 to 109, but then calm once again. And it happens too often that we don't have ongoing moves. We don't have trends. We don't have enough. When we do have choppiness, but it's limited to small ranges. Why is this happening? So maybe there's just too much liquidity, too much money going around, and not enough air pockets, not enough shocks. So if we look at the Federal Reserve, balance sheet is still bloated with $4.5 trillion. Sure, they're not expanding it. They're even raising rates very, very gradually, but they didn't take back that money. The European Central Bank, sure, it reduced the volume of bond buys from 80 to 60, but it's still flashing the cash every month, okay? 60 billion euros of bond buys per month. Will volatility return when the Fed starts squeezing its balance sheet? Hopefully. They might begin doing it towards the end of the year. But in general, central banks are very, very slow. So what can move markets? Maybe more shocks. So we have Trump, and yeah, Trump is shocking. Maybe he'll be impeached. Who knows? He's the gift that keeps on giving, more and more and more scandals all the time. And China. So we move from the largest economy to the second largest. China has its big party congress in October, and they're sort of keeping the economy stable until October, but maybe afterwards things may change. But in general, these are certainly frustrating days in the markets, okay? So I just wanted to vent some of my frustration. For traders, this is certainly an issue because, well, I guess some of you do like range trading, but even if you do some range trading, if ranges are so limited, it's quite boring and not many pips to win or lose, and you also need very narrow, very tight spreads. And if you're looking for breakouts, well, these are few and far between. Not what we used to have not that long ago. Remember, 2015 was one of the best years. So hopefully we've reached the bottom. Hopefully, thanks to Mr. President, or who knows, things will move, be on the move once again. Okay, and now for the preview of next week's events. Preview for the week of May 22nd to May 26th. Nothing much on Monday, not many important events. On Tuesday, we have Eurozone PMIs. We have the German IFO business climate. So a few data figures to move the euro. public sector borrowing. Maybe it'll have some importance because of the upcoming elections in the UK. We have US new home sales. Most of the sales of new homes, most of the sales are of existing homes, but new home sales trigger more economic activity, and that's why it's watched, and it's correlated with the wider economy. Wednesday is the busier day. We have, I missed here, it's not the Canadian jobs report, it's the Canadian rate decision, oil inventories, and most importantly, the Fed meeting minutes. So the meeting minutes from the Fed come on the background. They're released next week, but it's for the meeting that happened in early May. Since then, we had poor wages, we had poor retail sales, we had other figures that missed, like housing. Remember, this document is revised until the very last moment. It's not a clear reflection of what happened in that meeting. It's a document that is meant to move markets or send signals. I expect it to be a bit more dovish than the Fed statement. Watch out for that. The meeting minutes releases are more important when they refer to a meeting that did not consist of a press conference and new forecasts, okay? So this one could have more of an impact. More figures for next week. We have the second release of UK GDP. Last time it was very weak, 0.3%. I guess it'll be confirmed, showing us that Brexit begins biting. As always, jobless claims also on Thursday. And on Friday, we have, it's a very busy day for the United States. We have the second release of US GDP here. Revisions are much more common. Hopefully, we'll get an upgrade. The last report was very poor, 0.7%. And also durable goods orders. This is a report for the month of April. And maybe Q2 is better than Q1. And we'll also have a revised measure of the consumer sentiment figure. Okay. So that's the preview for the week of May 22nd to May 26th. So before you wrap up, let's take another look at euro dollar. We mentioned that euro dollar was rejected from the highs, and the rejection continues. So we're already some 30 pips off the highs. 110.87. The high is of course 111.22. Line here that Ed mentioned. So let's wrap up the show. This is the wrap up for the live market open for May 17th. Trump is the center of attention. Well, he likes that, but perhaps not for good reasons. He fired last week FBI Director Comey. Contrary to other scandals, this one does not die that quickly. It was messy damage control, and why Comey was fired. A memo showed that Trump asked Comey for loyalty and intervened with Flynn with the affair regarding the disgraced national security advisor that had to quit, and a second affair regarding disclosing classified data, risking Israeli spies within the ranks of ISIS. And Republicans are becoming more and more wary. The agenda is at risk, and the US dollar is falling. That's sort of the main theme in markets. In addition, there are doubts about the US economy because of weak retail sales, weak inflation. The last figures we got, also weak housing figures. Elsewhere, we had some recovery in oil prices. We had the pound hit by the Bank of England, which expects a smooth Brexit, but still sees inflation is stalling, no rate hike is coming. And the euro does look good with politics and also with other stuff. Other things worth mentioning in the wrap-up. Let's look at the charts. So euro dollar, we mentioned this, rejected from resistance at 111.20, which was the triple bottom, and now it's falling. Support awaits at 110.50. So we're seeing some recovery of the US dollar and a very, very nice technical behavior of euro dollar. This is the 111.20 line, double bottom here last year. Resistance 112, 113, support 110.50, 110, 109.50. Pound dollar 129 is the favorite handle. Currently, under 130, which is a tough cookie to crack. 130.50, 130, support 128.25. Dollar yen reflecting the weakness of the US dollar, already 200 pips to the downside. Support 112.20, 111.60, 110. Resistance 113, 113.60, 114.30. And Aussie dollar, well, now retreating just a bit, but it has recovered from the lows. Support 73.75, 73.30, and resistance 74.50 and 75. And the Kiwi dollar, just under 69. Support 68.15, resistance 69.60. Okay. This wrap up, let's also mention a few upcoming events. So the biggest event this morning is the UK jobs report. Okay, that's an important figure, especially wages. Watch out for wages over there. And we have the Australian jobs report during the night. UK retail sales to watch out for. And Draghi, will he push the euro lower like he likes to, or will he give it more room to rise? And Friday is a quiet day with only Canadian data standing out. Sorry to all my Canadian friends. In any case, that's what we have in markets. All in all, the bigger theme is the weakness of the US dollar on the Trump scandals. Trump is overshadowing the weakness of the US economy. Well, these things are compounding each other. So I guess that's it for today. Thank you very much for coming to the show. As usual, you can watch all the clips, watch the full show and all the clips on FX Street, and later on also in Forex Crunch. I hope this volatility wakes up, and that's it. Looking forward to see more scandal and action. I wish everybody a safe and successful day, and see you next week. So that's it for today. Thank you, and bye-bye.